Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is still in the process of rejecting to the upside a quite strong historical structure level. In fact, this zone was already acting as previous resistance starting from here, preceding all these rejections to the downside, and now the market has broke above the zone. So all that previous resistance is now turned support here. The market has already tested this previous resistance turned support, is currently rejecting it to the upside, and in a situation like this, the development of this uptrend, you would expect it to continue. However, what is important to keep in mind is that in every market, the market cannot just go up in a straight line. Every uptrend is a series of higher highs and higher lows. So every time that the market creates a push to the upside, if it is in an uptrend, it should create a new higher high. And at the same time, every correction should create a higher low. So the lows, each one should be higher than the previous one, and the highs, each one should be higher than the previous one. That is the definition, textbook definition of an uptrend. Now, in this specific case, we can see that we already had a first higher high, then we had a higher low. Now we just had a new higher high. The next logical step would be to see a correction, a higher low, and then yet another higher high. So in a situation like this, we have to keep in mind that at any moment, the market could start the new correction, because at this point, the market does seem quite overextended to the upside and in need of this correction in order for new buyers to enter and the market to continue higher. A correction in a bullish market with bullish trend is always most likely a positive and healthy correction, because it gives the possibility for new buyers to enter. If the market just goes straight up, at some point the market will become overextended, and that is where strong corrections come in place. So in a situation like this, we have to keep in mind that there is good probability of seeing first a correction and then the continuation to the upside. Our first correction zone would be the 0.32 of the Fibonacci taken on the impulse leg, which at least at the moment is currently lining up at this zone. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, if we have to identify what kind of structure and price action and patterns have just played out here, we have to first of all start by identifying that the market was in a range. In fact, clearly here we had the top of the range here and the bottom of the range here. In fact, before the market broke out from the range, we clearly had a market which was moving in between these two levels, right? Then the market broke out from the range, and that happened exactly with this pattern, with this candle here. This candle closed above the high of the range, and what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. And the market, in fact, retested the level here as previous resistance turned support, respected it as support, and the market rejected it to the upside. After that, what we had is a very clean impulse to the upside, followed by the correction. Now the market is continuing with the continuation to the upside. So in a situation like this, there is good probability of seeing more bullish price action being developed away from this area. So the weekly time frame as well does seem quite bullish. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, what we can notice is that at the moment we are in impulse phase. We just had a massive impulse to the upside, breaking out above this previous high. However, in creating this move to the upside, the market is also creating an overextension pattern, which is essentially this overextended W formation. Now, after the creation of a W formation, as explained many times, what you would expect is for the market to create a rejection to the downside, at least for a correction to the 0.32 of the Fibonacci taken on the impulse leg. We can see, for example, one example of this pattern exactly here. I just found one, which is this overextended W formation here. After that, the market followed with a correction. This is a pattern that the market likes to create over and over again. So there is a good probability for a potential correction from this area. And the first downside target would be the 0.32 of the Fibonacci taken on the impulse leg, which at this point is lining up at this area. So before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold, so the non-commercials. So essentially institutions that are in the market just for profit. Now, what we can see here is that with the last reports, net positions have been decreased. We went from having 294K net positions down to 282K net positions, showing that in the very short term, we're starting to see a slight profit taking from an institutional perspective. Now, that might be just enough for the market to, in fact, create this correction, coming and fueled by the profit taking from an institutional perspective. Because if you have longs and you close that long, that is essentially a short because you're selling your position. So that selling pressure could bring gold to create this correction, potentially completing this overextended W formation and that 0.32 retracement. So this is the situation that we currently have for gold when it comes to the commitment of traders. A slight profit taking in the short term that is currently happening. Now, let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. So from a daily perspective, it seems like this level seems to be quite overextended, and institutions are taking profits at this level. So that increases the probabilities of a potential rejection to the downside away from this zone. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this overextended W formation. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.